The Greater Bay Area, even today, is larger than South Korea in terms of the GDP and larger than Australia as well. The $4 trillion GDP is about the size of the German economy today.
Where do you see the future of the Greater Bay Area there?
Bay Area comprises about 72 million people. It's almost like 5% of the population of China. But the GDP for the Greater Bay Area today, I think it's something like 1.6 to 1.7 trillion US dollars, and which is about 12% of China's GDP. Greater Bay Area also exports about 37% of all that China exports. So it's quite an important area in terms of China. And I think given the Greater Bay Area plan, by 2030, it's expected that the GDP for the Greater Bay Area will be something like 4 trillion US dollars, which is like the size of Germany today. And I think even by today's GDP is something like number 14 in the world. Today is about 23 to 24,000 US dollars GDP per capita. It's not extremely high, but it's okay. It's only just starting. And the designated role for Hong Kong is that of a financial and business services center, and also an incubator for technological development. I don't know how well it will do in that role, but that is supposed to be part of Hong Kong's role as well.
You just mentioned, Carson, that Hong Kong, I'm not sure if Hong Kong will be able to play that technology incubator role. Why not?
In fact, Hong Kong is great in terms of the rule of law, in terms of the financial sector. In terms of technological innovation, it has never really cut its teeth as one. Shenzhen, obviously, has done very well. And when compared to our neighbor, then Hong Kong has even more to catch up. But we have 7 universities in Hong Kong, etc. But compared to the huge number of engineers and science and technology graduates that are produced in mainland China, then Hong Kong obviously does not have much of a competitive advantage.
A lot of debates about the potential financial center future for Hong Kong. Where do you see Hong Kong stay in 10 years' time?
Again, it's a matter of direction. I think if people of Hong Kong now all see very clearly sees that Greater Bay Area and the continued growth of mainland China, in fact, China perhaps becoming number 1 in terms of GDP, etc. If everyone takes a positive view of Hong Kong, then I think there will be a lot of future. Hong Kong has to get its mood right, get its direction right. I don't think we are quite there yet. So don't underestimate the effect of the social unrest back in 2019 has on Hong Kong as a whole. It becomes a very divided society, and also leads to some degree of emigration. I'll take some self-confidence away from the usually self-confident Hong Kong.
Hong Kong has become this hotbed of listings for China's future companies. But interestingly enough, you said Hong Kong's economy has not sustained as well as the mainland counterpart in 2020.
Now, in terms of the number of listings, etc., Hong Kong has indeed regained its place as number 1 in the world. So, but that is, the stock market is only one part of Hong Kong's economy. The other major part, tourism, obviously has been very badly hit, both by the social unrest and then by the COVID. The real economy, so to speak, is not doing very well. Given the Sino-US trade disputes, the trading part of Hong Kong is down as well. Back in China, of course, there is a very large domestic economy which Hong Kong itself doesn't enjoy.
We still see Chinese companies coming to the United States. Is there more of a trend today that they are opting more for Hong Kong than for the United States?
They are. It is natural for mainland Chinese companies to list in Hong Kong. I think some of the movement of Chinese companies going to the US markets is also because of the success of SPACs as a way of indirectly listing. And SPACs are really based in New York. There are quite a few Chinese companies that achieve listing in New York through SPAC mergers. I think that explains why there were that number of Chinese companies listed in New York. There are no SPACs in Hong Kong.
How do you see the potential future competition between Singapore and Hong Kong?
Yes. It's been said that given the social unrest in Hong Kong, some Chinese capital have gone to Singapore. And I have checked with contacts in Singapore as well. I think that is the case. Movement of some money from Hong Kong to Singapore is a loss to Hong Kong. And I think Hong Kong should continue to develop itself as the international financial center for China, which it has always done. But given the social unrest and it has led to some Chinese private money in particular moving over to Singapore. As a listing center, then Singapore has no competition with Hong Kong. It's far, far smaller as a capital market than Hong Kong. And of course, Hong Kong also benefits from its being right in China compared to Singapore.
2040, where do you see Hong Kong?
Two scenarios. One, losing direction, talents leaving Hong Kong, which sometimes you see, and also international talents leaving Hong Kong. There are more mainland Chinese talents coming into Hong Kong. In a way, Hong Kong becoming more Chinese than as international as it was. And I don't think that should be the best role for Hong Kong, only for Hong Kong for itself, but in terms of it playing a useful role for China. The common law system in Hong Kong provides a distinct advantage. So the linguistic advantage of Hong Kong, I would say, is no longer there. But our legal system, the very sound financial sector is still there. If you ask me what's the scenario for Hong Kong, one, maybe it becomes a major international financial center, even more so than today, because it would be the financial center or international financial center in the Greater Bay Area, which, as I said, even today is like 71, 72 million people. It's a huge economy by itself.
You are the founding chairman of Bank of Asia. Tell us, why does the world need another bank?
Bank of Asia is a digital bank. Now, it's a new bank as well. What it means is that it has no legacy. It is very difficult to become truly fintech if one has to deal with legacy IT systems, etc., etc. So Bank of Asia is lucky in that it is a new bank. So we are able to build it with the latest fintech. And that enables customer experience to be enhanced and lower cost. Fintech becomes so advanced today that what we built in a Swiss system, a leading Swiss banking and core wealth management system that we put in 2017. We took the whole thing out in late 2019 and 2020 because fintech in China has advanced so much that we took out a world-leading Swiss system to put in a new Chinese fintech IT system because it uses a very different architecture. So the system now we have is what we call container architecture, that in the container architecture, all the serve functions that we need are in microprocessors, or you can imagine in containers, and then we stack up those containers. The Swiss system that we used to do is a monolithic system. All these world-leading banking systems are monolithic large systems, but that becomes a lot less agile than the container architecture that we're using today, as supplied by a fintech company in Shenzhen. I must say that fintech in China has stunned the world.
Fascinating. Mr. Carson Wen, thank you so much for your time, and enjoy the rest of the Chinese New Year.
Thank you for having me.
Thank you.
Bye-bye.